Wouldn't it be nice that if you could see the future, knowing which real estate markets are growing, which are not? Well, guess what? Today, I have a special guest, a blast from the past, that's going to share that knowledge and a lot more. So you know what you need to do. You need to simply stand by and let's get it.
Text me and I'll text you back. Text me and I'll text you back. Text me then I'll text you back. You text me then I'll text you back. Text me then I'll text you back. TikTok, you don't stop. I will help you make your paper stack. Where you at? Where you at? Where you at? Where you at now? 205-964-5243. Now you know. 205-964-5243. Now you know.
Hello guys, this is Ty, aka the Flip Man, and today we have a blast from the past, a really good interview from a couple of years ago on how to use data to make real estate investments. We have our friend here, Ariel, from the Tampa area, and I think the way I titled the video before, the Data Queen or whatever, and so I'm sure she got a little traction from that, and she's done a lot of different things since then. She reached out to me a couple of weeks ago, and we finally put this together to bring it back to you guys. So how are you doing, Ariel?
Well, first off, thank you so much for your time today, Ty, and super excited to be back within your community. I've been doing pretty well, and a little bit about my background for those that don't know me. I started investing about 5 years ago, and as a techie, I wanted to leverage automation and data as much as possible. But I realized when trying to analyze my own markets or my own deals, it was very difficult to do so without it being super manual. So with that, I started a YouTube channel to kind of document my process of how I automated, use data to make data-driven decisions. And then from there, I've actually gone full-time as of 4 weeks ago,
really? Okay.
building out my own product that can help investors as well as other real estate professionals.
Oh, wow. Okay. So since that time frame, and you were probably already in the loop before the masses were, you know, AI has really taken off. So I'm really eager to see what you've probably integrated into what you are doing now, you know, that, you know, the masses are much more aware of than, you know, 2 years ago. So with that being said, before we get into it, because I know you want to share your screen and show some of the things that you're doing, what areas of expertise do you normally focus on? I think from before you were targeting more, was it more rentals slash short-term rentals, Airbnb, things of that nature?
Yeah, so mostly my strategy is buy and hold, but I have picked up 2 short-term rentals since, which have been doing pretty well. So we'll probably migrate my strategy to focus more so on that. Okay,
understood. Okay, so if you want to share your screen, we can start to get into some of the things that I think would be very helpful to many.
So this is actually fresh right now, Ty. I recently just created this week. I came back from a real estate conference, one rental at a time in Vegas. And the number one question that I kept hearing investors and flippers ask about is, where are good areas to invest in? And as much as it's good to use information like Facebook groups, just locally talking to people, it is really useful to use data to get you at least 70% of the way there. So I've created a free market explorer tool that can allow you to find and discover different markets based on things like long-term growth, profitability, and affordability.
Nice.
Yeah, so I could jump right into this.
Okay.
So one of the questions that I get is, well, what areas are appreciating?
Boom, I wanted to show you guys my new tool, offers a free, which is a GPT to help you know if you actually have a deal or not. The number one reason why most wholesalers fail, from my experience of dealing with people for a long time, is they don't ever get this part. knowing what makes a great deal or not, which simply means what price should you accept or what offer should you make in order for you to accomplish a significant payday. Now, in order to make an offer, you're going to need just some general information. The most difficult thing for people just starting out is determining the ARV. Now, the ARV that we're going to use here is $559K. Now, if you're not sure about that process, here in the tool, you're going to have a reference to a video that you can access to show you how to do that. But in the meantime, you can use the two free services such as Zillow and their Zestimate, which is not always accurate, but it can be useful for what you're trying to accomplish to at least get you in the ballpark, if nothing else prevents you from wasting time on stuff that has no chance of being a deal. So what you can do is compare with Redfin also, which is the Redfin estimate. So you have one that says 559 and some change, and the other says 576. You could average those out, but I'm just going to go with the lower number since they are close to each other. So going back over here to Officer Free GPT, we're going to go with 559K ARV. The square footage on that property was 1896 square feet. We're going to say that it's not livable, which you have to determine whether it's livable or not livable. In this situation, we're going to say it's not livable, and how much you want to make on the deal. Now, ideally, which I have 25,000 in here, but we're going to raise that number. Ideally, to determine how much you can make on a deal, you can do between 7 to 10%. So this is 559K. For just even number's sakes, we're going to say we want to make 55,000 on this property. All right, so if I hit enter and let it do its work. Now, once it goes to identifying the criteria that you placed in, it's going to ask you, do you want to use the default settings of, if it's livable, $25 times the square footage to calculate the repairs, or $40 times the square footage to calculate the repairs. Now, that is a generalization, not set in stone, but it can be very useful and it works in most cases. So with that being said, we're going to say we want to use the default. Now, you can change this to whatever. The house may not need as many repairs in some situations. It may need to cost more because it's a more of a higher end area, which, you know, the materials are normally going to cost more because of those type of materials that you're going to use to accomplish that renovation. All right. So with that being said, as you can see, it ran through the numbers. Now, it's going to give you a summary of what you should offer to the seller and what you should promote it back out to the buyer for. But before it does all of that, it breaks everything down so you can understand how we arrived at that number. So with that being said, the seller's offer is $260,460. And if you're trying to make $55,000 on this deal, the cash buyer price that you should promote it at is $315,460. Now, of course, this is negotiations. Someone may not pay you $55 on this deal. They may want to pay you $38. It can close in 10 days. I'm taking that. That's going to be totally up to you. But if you want to access this particular tool, all you have to do is text GPT to 205-964-5243. Now, I'll be doing more videos on this particular tool, but for now, back to the video.
Meaning that prices have increased and potentially a lot of people are maybe migrating to that area and it could really boom. So appreciation, I'm getting this data from the US Census, and we are looking at MSAs. So think of kind of like cities, but metropolitan areas.
Correct.
We could see right away that the city with the most growth is Santa Barbara, California, that has 40% increase in median list price.
Wow.
But you might be thinking, what is the price? 1.7 mil. I can't afford that. That's not going to work my strategy. So we can filter here on specific regions as well as pricing. So I hear a lot about the Midwest. So maybe I want to discover what markets are appreciating there.
Okay.
I see here Bloomington, Indiana. Still a little bit out of my price range. Maybe I'm looking to invest with less than $250K for a property. Okay. So I can also filter on that on the left-hand side.
Okay.
And then the number one market or metro that has had appreciation within the Midwest, prices are still moderately affordable, is Akron, Ohio.
Wow. Okay.
Have you heard of Akron, Ohio before?
Yeah, that's where LeBron James is from. I think they pronounce it Akron.
Akron.
Yeah, so it's I think it's less than an hour outside of Cleveland. So yeah, that's the city that I'm assuming you know who LeBron is. That's where he was born and raised. Yeah.
Yeah, no wonder it sounded familiar.
Yeah.
But yeah, so by leveraging this data, it's taking information across the sources that I have in my tab. So from Apartments List, Zillow, US Census, Redfin Realtor, which is all publicly available data for free. So I'm just kind of migrating this data and putting it into a dashboard that makes it easy to access. But shifting over to like the real power of it is that the question I always get is, okay, well, appreciation is good, but I want to look at a lot of different things. How do I do that all at once?
Okay.
So by using this left-hand side of the different metrics that we have, and I'm going to just reset these quickly. I also have Hotness Score. So Realtor, they provide the score of like which areas are the most hot. This looks into like supply and demand. And then another thing that an investor might find interesting is affordability. So how much is someone spending on rent for their entire income? So if people are spending usually over like 30% of what they make on income, it could show that they're like kind of tapped out of what they can afford. So you may not be able to increase rents in the future that much. So I find this really interesting.
So,
and if I want, yeah.
So like we're looking at the average rent of $1,007, and it says YOU. I mean YOY. I'm sorry. What at 3.8%? What does that mean?
Great question. That means year over year change.
Year over year. I was about to say year over year. Okay. Yeah. All right.
Yeah. To see how things have been trending, because it's great to look at things, what's happening right now. But if things are trending the wrong direction, like in this case, we see population has kind of remained steadied. It hasn't really increased for this piece. Is something that we'd find interesting.
So are these numbers based on those 10 that are selected? Oh, just for Akron. I see it here, the MSA for Akron. Okay, I'm sorry. Okay, I see it there right below select top 10 ranked cities and then Akron. So that's just for Akron there. So on any of the, if you click on one of those, or it just goes in the order based on the selection up there at top.
Yeah, great question. So I'm basically taking whatever your criteria is on the left-hand side, and of all the metropolitan areas, just looking at the top 10 that meet your criteria, and then you could select those top 10 and learn more about them.
Okay, can you go outside of the top 10?
Yeah, you can.
Okay, all right, cool. All right, continue on. I'm sorry, continue.
Great questions. I appreciate that. So the idea here on the left-hand side is that you could select different metrics at the same time, but you could put a weighting towards what you feel to be more important. So maybe in this case, I find this Realtor Hotness Score to be like 30% of what I care about, but I want to lean a little bit more towards affordability. So now I've kind of created my own scoring method of what I find to be interesting in discovering a market. It's leaning more towards household to affordability, but it's still looking at the other criteria up here. And now we see the rankings have changed. The number one here is Lynchburg, Virginia. And we're viewing right now, Lynchburg, Virginia has had median list price of about $340K. If we scroll over to the right-hand side, we could see that 20% of or 80% is that household income to rent ratio. So if you kind of look at that the opposite way, it means 20% of what a typical, say, tenant is paying on rent. Sorry, for their, if I could say that statement over again. So it would be telling you that about 20% of what a tenant makes per year is what they're spending on rent, which is a pretty good ratio because typically, like I mentioned earlier, we don't want to see it where it exceeds 30%.
Okay, nice. Okay, so there's, like you said, there's room to improve and increase rents.
Exactly.
Okay.
That's correct. And then say if you wanted to dive deeper into that market, so I still have Lynchburg selected, I can now kind of look at some housing market stats, which again is all public data available from Realtor, as well as Zillow has something similar. Let me just expand that again. Great. And this helps us to kind of just dive in and understand like the trends of what's been happening in this market. And I could see that like list price has pretty much increased. So there's some good appreciation within this market. It looks pretty typical to a lot of markets that I see, where days on market were higher prior to 2020. And then afterwards, since there's like no properties on the market, days on market has gone down. But it looks very typical for seasonality, where in the summertime or in the wintertime, houses usually stay on the market longer. Going down, we have some more metrics here, looking at supply, looking at demand. So you could really get deep with this tool, but what my like takeaway for it is, as a starting point, when you're just trying to discover markets and you're looking at a couple of different criterias, you could use this public data or my tool where I kind of put it together to start to analyze different markets and at least get to a top 10. That's the biggest struggle that I see with newbies or even investors looking to go out of state, is just understanding how to even get from the whole nationwide to maybe 10 or so cities.
Okay, I got you. Can you now, to leverage this, because we've been focusing on self-storage a lot. I don't know how much you know about that industry or not, but obviously new builds generally happen, new constructions, new developments happen because there's growth or not enough supply to a particular area. Knowing that, and so that means we will be looking for population growth. Is there a way to look at that in a different way that we're looking at here? Like we're looking at Lynchburg, Virginia, and I see the total population is the 262, 124, and there is some growth there. Is that the one metric that we would look for? I guess we could look at the median household income, because that matters also. We see growth is there also. So that's how we could leverage this to see if those opportunities exist as far as self-storage.
Yes. So you could use the total population. And then when you mentioned inventory, I might not have it here. Yeah, I could add inventory in, but Realtor does provide the supply score as well. Okay. So this is kind of like looking at, how low inventory is. So you can also look at this chart as well.
So Realtors, I'm assuming you're using their API to pull this data, right?
No, actually, I'm just using, I had it here previously. Okay. Let's see, Realtor Data Center. And I think it's this one. You could actually just download this to an Excel file. They have monthly inventory and they have monthly market hotness that they update every single month. And
that includes the entire country?
Yeah, the entire country. And you could go from national level all the way down to zip code level.
And does that include actual addresses or just an overall snapshot of markets?
Overall snapshot of markets. I wish, Ty, that it was down to the address level.
Okay, that was going to be my next question. Okay. All right, interesting. Okay, so yeah, that database is it can be very useful. And so it's just in a PDF or Excel file or what?
Yeah, it's an Excel file. Okay. And I have some videos showing like how to work with that if you wanted to do it programmatically. Okay. But the reason why I created the tool was because I kept getting the feedback of this is great, but I don't want to have to like do all the coding and set it up. Yeah. So that's why I pushed it here.
Yeah, that's why restaurants technically shouldn't exist, but it's convenience that we're paying for, that we don't have to do the cooking. But anyway, so. All right, so I'll continue on. I digress. Continue
on. Yeah, so this is pretty much it. And what I wanted to kind of express is that really being able to leverage data is important. And prior to ChatGPT, it was actually like pretty hard for someone who wasn't a techie to access this. And even it was hard for someone like myself to sometimes like get everything together and be able to publish it out. But with the rise of AI, ChatGPT, a lot of these questions that you may have about a market, you could also just like search on those tools because they are able to access similar data like census data. So if you wanted to know the population for a particular city, you could type that into ChatGPT and even ask, like, can you give me a market summary report of what's trending and not trending? And it could do that fairly well. It's obviously not like trained just to do like real estate related tasks, but it can get you at least like 70% of the way there.
Wow. Okay. All right. So if someone's looking to, let's just use Airbnb because that's always a hot topic. Rentals obviously forever, but if we're going to do short-term rentals, what would be the process of someone going through this data to say, hey, this is probably a good market to invest in, or this part of the market? Because I see you have it broken down the city, zip code also.
Yeah, I mean, the best tool is AirDNA, hands down, because they have like market rates and stuff. But if you were using this tool, it could be useful. Probably in terms of like the growth stuff would be more interesting, because for short-term rental, you want an area that a lot of people are like frequently flocking to. And maybe if an increase of population means, the city is starting to expand, maybe more conferences, or there could be like a new cruise port. That's something that I was talking to someone recently about, how cruise ports could be an indicator. But overall, I think looking at long-term growth metrics is useful when trying to assess a short-term rental property area.
Okay, as far as actual rental properties then, what are just from your personal investment strategy, what are you looking for normally when you're just looking for your buy and holds?
Yeah, for buy and holds, I am looking really at location itself. So actually, let me transition quickly to the product that I've built alongside two other folks, Coffee Closers. So this is a process that like I used to do just on my own, but now I've put it into a tool that other people could leverage. But since I have a pretty fair runway, since when I first started investing in terms of like age-wise, I was looking to really just hold something for like 30 years. So in that case, I'm okay with being in an area that's like borderline sketch for right now, but has the opportunity to really grow. So using economic data, like looking at population, median household income, education, seeing if like more people with bachelor's degrees are increasing within the area is how you can kind of start to get and understand if it's becoming gentrified. So I particularly look for areas that are in progress or early signs of gentrification. And that has done well for me because I've seen each one of my properties significantly increase in appreciation, where I've been able to like use that money, take a HELOC and put it towards other properties. So basically scale faster. And I think that it's a really great strategy for anyone getting started, looking to hold on a property for a while, to go to specific locations in the city that are in early signs of gentrification.
Wow. And so that's what Coffee Closers does, huh? Could you go through some of this then, just to give us an idea? This is amazing.
Yeah. So alongside maps, the whole idea is how do you just get to finding a deal faster? So we do that by pulling in location data, as you see on the right side of the maps. And then we also look at multiple factors for a property, like what makes a property a good deal. Some filters that we have, and I'll show, I think it's, or might be, we just did a redesign. But one of the filters that we do have is if a property is misclassified. And this was one of the ways that I found my deals. So I was looking for a multifamily property in Detroit, and I was getting really frustrated because everything was like pretty high price comparative to the price I was looking for, my price range. And I still really wanted a duplex. So I pulled in property information and was auto scanning descriptions, and I found that there was a single family home that basically was a duplex, but it was listed as single family.
Wow.
So it was mislabeled by the agent. And when I went to property records, it was in fact a duplex. So I was able to get that property for about $20,000 to $30,000 less than if I would have gone like just for those regular duplexes that were listed as such. So what we do at Coffee Closers, in terms of helping you find the best deal, it's not just looking at cash flow, but also looking at all these other attributes that could be like a game changer when looking for a deal.
Interesting. Okay, so like the properties that we're looking at now, I guess if you can click on one of those and let's see what's displayed there, if you could explain it.
Sure.
Is this pulling from these listings from an MLS database or Realtor or something like that, or what?
Yeah, so we do have an API that we use called Real Estate API, and they have information across all properties, and feel free to reach out to them if you want to build how to process on your own. They're a really reliable API. So alongside them that we use, we also get information across multiple different sites, including all of those like Realtor, Redfin, Zillow. Pull that information in, and then we help you run the numbers for a deal so you can quickly see if it will cash flow. With that, we also incorporate the location data so you can understand the neighborhood a bit better. So is the area improving? Where is it in the stage of gentrification? And we also have rental comps, sales comps, and ARV comps.
Wow. Okay. All right. So like if you'll go back to where the gentrification is going on, how does, so it says in progress, just to sort of explain some of those numbers there.
Yeah, so this was telling us here that in the last 5 years, most of the population that lives in this, what we call a tract, US Census tract, so think of it of maybe like a mile radius or so, where this property is, that most people have moved here from the last 5 years, about 30%. We see that 55% of them are employed, 24% with at least a bachelor's degree or higher, and median household income of $57,000. I just threw a lot of numbers at you, but what does all of that mean? Well, what we do is we look across all of these micro areas, these tracts for the city, and we basically have a ranking system of like which ones have the best like mix of these stats versus the worst, which have been trending in a good direction versus bad. And then from there is when we give it the grade, or in this case, a stamp of if it's in progress or not in progress of gentrification.
Wow. Now, so it'll be market or micro market specific. So this one, like you couldn't compare this to another city totally. It's based on what's happening in that area to give an idea if it's in progress or not. Exactly, based on the particular market. I got you. Okay. Okay, and I see over here under the run the numbers, it's giving you, you know, the income, rehab costs, initial cost, monthly cost. So it's automatically going to default all of that information, and I'm assuming you can make adjustments as needed. Yep, it will default all the information. And say so we had a lot of requests in terms of like monthly costs, where maybe you have a property manager that you get a great deal, 9%. So it doesn't meet like our usual standard of 10% for property management fee. You can go into your own personal financial settings, set that to whatever number. So say in this case, 9% for your property management fee, and it will apply across all properties going forward. Okay. So you can really customize it here. Okay. So it's targeting properties that are listed, you know, in, I guess, whatever market per se, to do that. All right. So on this particular deal property right here, what would you be on purchasing this if it's in your price range? Yeah, great question. So let me actually jump out of this one because I typically don't like less than 2 bedrooms.
So my usual strategy is I like to look at properties where I could potentially add a bedroom, because maybe there's like enough space where I can convert the dining room or a nook into an extra bedroom. So we have a metric for that based on the location, what that ratio of bedroom to home size looks like when you could usually add one in. And I think I have my filters reset. Like we just, like as I said, we did a major redesign recently to go nationwide. And that may be why we don't see this here, or it might just not be in Tampa area. Maybe we don't have the opportunity in Tampa area. All right, so if I can't follow that strategy,
let's do Miami.
Yeah, we could do that. So let's go to Miami.
This is nice. It's impressive.
Thank you. It's been really, really fun. Kind of like really being able to dig through the data and work with two other folks to actually put this all together in one spot. Let's see if it has any added bedroom. So this one may not. I'll probably have to check that. But let's just imagine we go to Miami. We see our market and we have some top picks here. This might be out of my price range. So let me go to this property, which is a little bit more affordable. So as this property loads up, we're going to get the same information that we saw previously. So we have the run the numbers on the right-hand side. I could see that it's 5-bed, 4-bath. And if we go down, we could look at the rental comps to see which ones have higher similarity and what our rent could be. We're also pulling in rent from different sources. So we have Zillow rent estimate as well as median zip code. So we have our rent algorithm that kind of combines these 3 different sources and provides like one single rent estimate. So in this case, the rent estimate would be about $5,100. Cash on cash return, 5%. I like to usually see a little bit higher. So maybe I can lowball this offer and offer a little bit less. So I could start to play around with this. And say if I'm looking for 9% return, I know that my asking price needs to be at least like lower than 531. So that at least helps me get partial of the way. If this still isn't a home run deal, maybe I'm looking for 15% cash on cash. The way I would look at this is start to like look at the images and see, is there opportunity to maybe do something more with this property? They have a pretty small kitchen. Maybe the living room is big and I can convert that space. So I would then put, say, like $900 more for the extra bedroom that I plan to put and see my cash on cash reflect with that.
Okay. So now it's at 18%. Okay. Yeah. And so the profit on that would be $1,856. And you would charge $37.85, I'm assuming. Okay. Nice. So, and that's taking into consideration all your holding costs over the course of a year expected. Some stuff is unexpected, obviously, along with your management fee to manage the property for you also.
Exactly. So we have, the initial costs of what that would be upfront to acquire the property, and then also on the monthly cost basis, what that would look like broken out.
Nice. Wow. Wow. This is impressive. What's the cost for this particular service here?
So right now we're pricing it by city based on the city size. So in case for Miami, where it's a larger city, it's $80 a month. To track the city, you could set up your buy box and have automatic deal notifications based off of the new deals that come in. And as I mentioned previously, you could tailor your financials as well. So you can really like customize this to what you're looking for within the given market and automatically get those deals so that you're the first one to pick up the phone and try to at least see the property.
Nice. Do you have a rate for the entire country?
Not at the moment. but if there's demand, we could definitely look into that.
Okay, so it's going to be so if you do multiple markets, it's going to depend on the market size, because I know you have your cost with the API, whatever.
Yeah, so for smaller markets, it's $40 a month.
Okay, all right, so they're tiered. So whenever you choose a market, it's automatically going to tell you what it's going to cost, correct?
Exactly.
Okay, understood.
And there's a free trial for 7 days, so you can kind of set up a single market if you'd like, play around with it, and then decide if you want to move forward with that market.
Okay. Do you have an affiliate program set up for this currently?
We have a partner program, which is more so for wholesalers to share their deals for free. And then anyone that they onboard, they'll receive an affiliate commission for that.
Okay. All right. Nice. Okay. All right. What as far as the does this apply to multifamily at all, or is this all for single family?
It's for multifamily as well. And what's pretty neat and kind of got me really excited. Let me actually put it for Detroit so you could just see quickly. Since Detroit typically has a lot of multifamily, we've actually broken down rent by unit so that it's a lot more accurate. So if I go to look at multifamily properties, and let's see if this one has it. Yeah, so in this case, it's a 2-unit, 3-bed, 2-bath. And then we have the rent estimates. We have the 2 layouts here. And then you could see based on each layout how much it would rent for.
Oh, wow. Okay. Interesting. And so it breaks the numbers down there at the bottom on what your possible profit would be on this 2-unit property. So what if it's 60 units? Will it do the same thing?
Right now, it's only for multifamily up to 4 units.
Okay. So, all right. So not commercial. Okay. Great. Now that's nice. How small, I guess, would the data pull that, let's just say a small city, like I'm going to say Meridian, Mississippi. Would it pull something from a town that small, or it's limited on that?
It could pull for all towns. I had it here before, but I guess I might have removed it. Yeah, South Amboy, my market, which is like really small. I had it here previously. I think New Jersey's Princeton's pretty small too. But yeah, as long as there's one listing, it'll be able to pull the data. It's just, if it's like super, super small market, like, population of less than 3,000 people, we just might not have the maps because it's too small of an area to have like the gentrification heat maps.
I got you. Understood. Okay. Well, what else do you have? I wasn't expecting this one. I like the first one also, but what? Oh, you've been working in these last 2 years. Oh my God. Yeah.
Oh yeah, we've been working a lot. I can show you this, which is something that, we're developing like very, very fast at the moment. So this is not accessible yet, but it likely will in the next week or so. We are going to move towards strategies. So not only is it more focused on traditional buy and hold and like kind of the creative add a bedroom, but now you'd be able to toggle on different strategies. So again, not live yet, but the idea is like you come to Detroit and say if you are looking for BRRRR, so you want to buy the property, rehab it, rent it out, refinance, repeat. You can select based on your strategy, and then we'll have the properties that rise to the top. Again, this is like not live yet. We still have some like kinks to work out, but it should get you a lot faster to find the property based on your strategy. And one more example here, like house hacking. We are going to be, which we've already done, but we need to have it live on the site, is we're recalculating rent based on house hacking the property. So if you're going to live in it and rent out the other bedrooms, rent will be recalculated based off of that, and you could see if it'll be a good deal.
Oh wow, no, yeah, that's nice. This is some game changing stuff right here, man. So let's look at the fix and flip tab there. Yeah. Wow. Okay.
Yeah, right now the cash on cash numbers are wrong since we're still in the testing mode, but the ARV spread is correct.
Okay.
So this is how you would look at it. And we're not just looking straight at ARV spread. We're looking at many different factors, also looking to see for these properties, are they in like flipping areas? Have there been a lot of flips within the last 18 months? So we're taking that into consideration when producing this list.
All right. So you all are comfortable with producing the ARV for any of the way you programmed it on pretty much any property that's that has enough data to produce enough comps. You're pretty comfortable with your ARVs.
Yes. Yes. Okay. Very comfortable with it. And it was not easy. Definitely took me probably 3 or so weeks to really get this and hone it down correctly. But from what the investors that we've spoken to, they've been satisfied with the ARV.
Oh, wow. Okay. Okay. Wow. So when you say this will be available in the next week or so, this particular.
Yeah, we're planning to launch this part March 1st.
Okay. Nice. So if someone just wanted to just to pull an ARV, how simple was that? You just put the address in up there up top?
Yeah. So let's say.
Let's do this. I'm gonna give you an address. This is the first property I ever did a deal on. I can remember that address if I can't remember the address I grew up in. 1232 18th Place, Southwest. Yeah.
In Birmingham?
Yeah. Mm-hmm.
Great. So since this, I assume, is off market, it's doing a little bit more work to pull the property, and it won't have the gentrification stuff on it, but it does allow you to get ARV. So you can click get ARV, and Alabama is not in a non-disclosure state, right?
No, it's not. It's not.
Okay, cool.
Oh yeah. So I'm glad you brought that up. So non-disclosure, it's like what, 10 or 11 of them, something like that.
Yeah, about 10 or 11 of them, and Texas being one of them.
Texas being one of them. Okay. So because of the API tool that you're using, they're not pulling any MLS data. So because like with other, some of the other services, the way they get around the non-disclosure states, they use MLS data to a degree. So if it's non-disclosure, then it's just not going to be able to provide an ARV for you, correct?
Exactly.
Okay, understood. All right, so it's given an ARV of this particular property of 100. Okay, all right.
Yeah, and then you could see some of these comps, and then dive into them if you'd like a little bit further.
Nice. Okay. Oh wow. Okay. Yeah, that's the block over. Interesting. Okay. All right. Wow. That's impressive. So now, in order just to use that particular when it goes live, you would have to still have. Would you have to have the subscription for that market that you're doing a search on, or it'll just pull up any property?
Any property.
Okay. It's just you can't search all the listings in a particular market unless you have that subscription for that market.
Exactly.
Okay. And to use this search to come up with an ARV, is that a cost?
No, that's incorporated with the plan.
Okay. But you will have to have a plan. We
do have the as long as you have an account, you could use the property lookup for free for a limited amount of searches per month, and you could still use the ARV.
Okay, understood. All right. Wow. Okay. Anything else you want to share with this, man? This is amazing, Ariel. This is amazing.
Thank you.
Yes.
I just want to share that, whether it's using coffee closers or another tool, it's really imperative, especially like I mentioned previously with ChatGPT now, AI, that you are using some sort of tool, some sort of system or process, even if it's using a VA and they're still doing things manually, but they're following a process to do. Because with real estate having like more knowledge and more competition out there, the margin of error is very low. Like you don't want to have as much error because it won't be as lenient as it was in like 2008. So all that to say, leverage data, leverage tools out there, and even use the free resources like ChatGPT to help you when analyzing deals and markets.
Nice. All right. So as you all see the scrolling contact information, sounds like it's just the tip of the iceberg. Like I say, the initial interview was maybe around 2 years ago. You've come a long way. Like, because I think we were only showing spreadsheets back then, right?
Yeah.
Versus what you have going on now, which I already knew it was going to dwarf into this. I can only imagine 2 more years from now with AI being in the mix, and what that will allow you to do. Now you all see our contact information here, but anything else you want to share before we get out of here, Ariel?
Yeah, I do want to share that we are going to be having a hackathon in April. So if you've ever been interested in building out a tool, this is your opportunity to do so for free. So we're basically pairing together investors, flippers with a lot of experience, but they don't know how to build things out or don't have the time, with individuals who are techies and they want to learn about real estate, but don't have a mentor. So we're pairing these 2 groups for 1 week in April to build some really cool stuff, and you could win $500 as well.
So it's going to be online, or it's going to be a live event?
It's going to be remote.
Okay, remote. Okay, cool. Wow, I'll be attending that. I think I'm a techie, but really not.
Awesome. Love to have you.
I understand stuff. Like, I can't do any code or anything like that by no means, but I love it. So anyway, so guys, I really appreciate she and I putting this together. Again, man, I'm sure we'll do something else. Probably do something before the hackathon just to refresh things, see where you are in the net with that. So that's almost not quite 2 months away, and man. This has my wheels spinning. So again, Ariel, I really appreciate you reaching back out to me to do this again, and look forward to doing more with you in the future.
Thank you so much, Ty. Really appreciate it.
All right, thanks, guys. And as I always like to say, we'll see you on the flip side.
Text me and I'll text you back. Text me and I'll text you back. You text me then I'll text you back. You text me then I'll text you back. You text me then I'll text you back. TikTok, you don't stop. I will help you make your paper stack. Where you at? Where you at? Where you at? Where you at now? 205-964-5243. Yep. 205-964-5243. You know.